we see the same thing you do in the housing market. It's tough. There's not people are locked in. They can't afford to get out of their house because the cost of getting to a higher mortgage, higher price mortgage would be a lot. So the best thing we can do, though, is to get inflation sustainably down to 2% and have it stay there over a long period of time, and that is really what we can offer to them. And I think, so if you go back to the beginning of the pandemic when we cut to zero and we did all those programs, we really saved the housing industry because they're the front line for interest rates. At a time like this, when rates are, I would say modestly restrictive, not even moderately, but modestly restrictive, they feel it, and their customers feel it. We understand that, but we only have one tool for the whole economy, not just for housing. So it's something we consider, but we have to consider the bigger picture. And I do think in the medium term, as rates come down, you'll see normalization in housing. Of course, there'll still be a national housing shortage. I don't know about your district, but
yeah. No, there's a shortage.
Yeah.
I mean, considering the macroeconomics of interest rates, I mean, how much consideration do you take housing into that decision as you address interest rates?
We're always briefed on it. We always talk about it. We always look at it. But at the end of the day, it's the big U.S. economy, the whole aggregate thing that matters. Mm-hmm. We also talk about the agricultural economy a lot as well. But ultimately, and manufacturing, it's got to be the whole, and not any one particular piece.